Hi, it's Andy Hoffman, Media Director of Miles Franklin. It's Friday, January 17th, midday, and I can't believe I'm actually doing my audio blog. As earlier this morning, as I was eating my breakfast, my computer crashed. And it seemed to me that I was going to have to go through hell to get it going, and miraculously it rebooted itself. So here I am. And what I'm doing is observing what appears to be a victory in the incredible battles that we've watched with the cartel for the lines in the sand at $12.50 per ounce gold and $20 per ounce silver. When it comes to gold, $12.50 has been there, as I said, line in the stand for the past 2 months, and it's never been more obvious that they don't want it to go above this level. We're sitting right at the 50-day moving average, and for whatever reason, they always tend to pick round numbers like this, or as I call them, key round numbers. And every single day this week, I've never seen this happen. Every single day this week, we've seen the exact same chart pattern, starting with the 2 o'clock a.m. Hit, and then at right around the Comex open, and then miraculously, both precious metals jump back up. And here we are at 12.53, where they're trying to hold the line near the end of the day, but just incredible action. Very, very bullish, as it appears that we're going to be piercing the 50-day moving averages, and amidst incredibly bullish fundamentals. As for silver, you can go really back 7 or 8 months to where that level of $20 was first capped. And again, I mentioned a few weeks ago, silver first went over $20 in early 2008. Not uncoincidentally, while I was at the PDAC mining conference in Toronto before they hit it back down. So the fact that with plunging supply and soaring demand, that we could still be at $20 per ounce after all the money supply that's been printed in the last 5 or 6 years truly shows how desperate they are. Actually, I saw Coeur d'Alene, one of the major silver miners, just reported year-end silver production. It was down 5% from their expectations. This is going to continue now for years to come. The capex has been plunging. The people are leaving the industry. The capital's not there. I expect, at best, small declines in production and possibly very big declines in production in the coming years. And of course, now that demand is taking off, per my article, Beware the Dragon the other day, I mean, we really are seeing the biggest worldwide physical demand that there has ever been. The Perth Mint just announced record sales for last year. In the UK, the sovereign gold coins, they ran out of them. And here we are 6 weeks later, or 7 weeks after the US Mint stopped selling coins for the end of last year, and they still haven't published any new numbers yet. There has been some whispers that it's been very strong and so far, and of course it has been. We'll see soon what exactly is going on with the US Mint, particularly as regards silver. As for the Comex, again, you don't need to speculate that demand is huge. We are now down to just 370,000 ounces of registered gold inventory. That's down almost 90% from when the alternative currencies destruction occurred last April, when they took gold down $200 in 2 days to prove their point that they were here to win this battle for the near-term sentiment. I mean, and we still have another 125,000 ounces that are standing for delivery for the December contract, and here we are in the middle of January. I know Harvey Organ tells me sometimes it takes up to 3 months for these settlements, but how could it take 3 months? It's like the German gold. Either it's there or it's not there, and either way, we're down to just 370,000 ounces. I remember last year, February was actually a bigger delivery month than December. So I can't believe that something is not going to happen soon in the Comex with those inventories. Which brings me to the topic of registered versus eligible inventories. Now, I am not the premier expert on the Comex, but it is truly amazing how the anti-gold propaganda comes out all the time. It almost seems like no matter how high, anytime it wants to go up, people come out who are supposedly friends of gold and will say anything to push it back down. Now the cries are, well, yeah, but there's only 300,000 ounces of registered, but there's 7 million ounces of eligible. Well, yeah, there is 7 million ounces, but that's gold that's held by customers. It's not available for sale. It would be like saying that my gold, my personal gold that's sitting at Miles Franklin's Brinks vault in Montreal could be sold. Well, yeah, it could. One day I may sell it, but it's not for sale right now. And yeah, they can try shenanigans, they could try their paper games, but the fact is, there's a reason why we're seeing these huge drains of physical gold around the world, whether it's the LBMA or the GLD ETF or here. And you know, to say, well, yeah, there's eligible inventory is ridiculous. By the way, the reason that eligible inventory doesn't change much is because when you have that much gold, there's only a handful of places you could keep it. So people just leave it sitting there, but believe me, it's not for sale right now. And I wouldn't worry about all these fear mongers trying to scare people. The fact is, there's only 300,000 ounces of registered inventory, and until that changes, that's all that there is. Now, speaking of the German gold, I don't know if anyone saw the piece that Glenn Beck did about a couple days ago. Actually, Bill Holter wrote an article about it. It's incredible. He did a full 20-minute video describing the German, you know, why the German gold hasn't been sent back to them, why it's probably been rehypothecated, and why it's going to be catastrophic when the world realizes all this central bank gold has been rehypothecated. I mean, this is a piece that will go viral. I am sure of it. I'm very happy to see that. On top of that, I wrote a piece today. It'll be out shortly, called "Gold Manipulation Going Mainstream." As I was just shocked to see Bloomberg put an article out 2 days ago saying that their analysts did work and believe the Chinese gold reserves are more like 2,700 tons than the 1,054 tons that they noted back in 2009. Now, of course, those they have to have higher numbers, but to see a mainstream outlet describe it is incredible. Personally, I think they have a lot more than that. I wouldn't be surprised if they have 10,000 tons, and that when all is said and done, they'll have 20,000. But on top of that, they then put out an article this morning or yesterday where they reported on an absolutely, utterly incredible event. Now, there's a financial regulator in Germany called BaFin, and I guess BaFin would be the equivalent of either the CFTC or the SEC here in the States, because they are called the top securities regulator in Germany. Perhaps they oversee all markets. This is the president of BaFin, and he, quote, or, you know, I'm paraphrasing, said that the gold manipulation going on right now is worse than the LIBOR rigging scandal. Now, get your hands around that. Get your heads around that. What an incredible statement that is to hear, particularly from someone in Germany who obviously is maybe a bit pissed off that the German gold is probably not there. The LIBOR rigging scandal was literally hundreds of trillions of dollars worth of fraud. The entire world knows about it. All the major banks were involved. And he's saying that the gold manipulation is worse. Now, of course, it's not as big because LIBOR is bigger. But as far as the actual impact on the market, of course it's much bigger. And more importantly, the ramifications it's had are dramatically worse than certainly more than LIBOR, because it's allowed governments to print all this money that they wouldn't otherwise if the barometer of inflation was allowed to go higher. So I think this is just an astounding event, and I look forward to seeing it too go viral. I really believe that, you know, one of our predictions here at Miles Franklin is by year end you'd see an even greater disparity between the paper and the physical prices around the world, and I think news events like this are really going to make that happen. Okay, now we go over to the United States. You know, I wrote yesterday about, I called it About That Recovery, and it's becoming crystal clear to anyone who's watching that the economy here is a shambles. I mean, to say there was 4% GDP growth last quarter I won't even go into that, just so embarrassingly ridiculous. Everyone knows now that the holiday shopping season was the worst since 2009. I mean, it literally couldn't be worse. I mean, if anyone watches the markets, they saw Best Buy, which for some reason was a big stock last year. I have no idea why. Down 30% yesterday alone. 30% for one of the top stocks in the market. And by the way, Best Buy is the biggest consumer electronics company in the world. And the reason it went down, because its holiday sales were much worse than expected. People were expecting 2% same-store sales growth. Instead, they were down 1%. And so if anyone believes that there's really a big spending boom going on here, got another thing coming. And in fact, this morning there was a industry trade group called NPD, which said that, if you can believe this, U.S. video game sales were down 17% in December versus December of a year ago. And I'm going, oh my God, video games. I would think that's the only thing Americans still spend money on. Because obviously people who are sitting home because they have no jobs have to play their video games, particularly their war games. And so that was a real sign of the times. I also saw bad earnings from UPS, of all people. Obviously, that's not a good sign. Intel, GE, and of course, Citigroup, which doesn't really earn anything. It just messes around with numbers. But even doing that, it badly missed its earnings estimates. And then, of course, today we had a huge drop in consumer confidence, the biggest plunge versus expectations in 8 years, a 10% sequential drop in housing starts and permits, and of course the drop in the ISM non-manufacturing index earlier this week. In China, the Shanghai Stock Exchange is down to 2,000 again. This is a multi-year low. It's amazing how the most important economy in the world is the only one whose stock market is not going up. There was a shadow banking bankruptcy today. The smog has been shutting down Beijing. It's really incredible what's going on there, and I do think at some point that's going to have a major economic impact. And so people really need to watch what's going on in China and not listen to the propaganda of this global recovery, because if things are not going well there, they're certainly not going well in the rest of the world. But as for the world's other stock exchanges, they are all soaring, no matter what happens to their economies, what happens to their currencies, etc. And perhaps John Williams will be right that 2014 is the year hyperinflation finally comes around. Yeah, I mean, we've spoken about Venezuela for some time, how the Caracas Exchange was the top stock performer of last year, up 500%, while its CPI rose 50%, just as we've seen in the past in Weimar, Germany, as we've seen in Zimbabwe, and pretty much every hyperinflation around. Pardon me, I had to stop. The phone just kept ringing off the hook. Anyway, now we've seen Argentina take over for Venezuela as its Merval index is soaring while the Argentine peso is now plunging. There's a black market for the peso, just like there was for the Venezuelan bolivar last year, which is down like 50% versus the spot price. And of course, the market is soaring. Then we have new all-time lows for the South African rand and Turkish lira, which, if you remember, are two of the fragile five economies where 25% of the world's population lives. The South African stock market is doing great, but their currencies are hitting new all-time lows, as is the Indonesian rupee is almost at an all-time low, and the Brazilian real is almost at its 5-year low, which actually prompted their central bank to raise interest rates 2 days ago, and despite a horrible economy, because they have such bad inflation that they're terrified there's going to be hyperinflation there. So again, watch what's going on. This is what we at Miles Franklin predicted, that there'd be a lot more currencies collapsing against the dollar this year, not because the dollar is so great, but because so much inflation has been exported by the Fed that the countries have to keep printing money to keep up with them. And watch out for those Japanese, because that sales tax that big sales tax increase is coming around in 2 months, and Shinzo Abe wants to print more money and inject it into the economy to offset. Can you imagine raising taxes to get more revenues, but then printing money and giving it back to people so they could pay those taxes? Japan may well be the first world economy to go into hyperinflation, even before us. And remember, speaking of us, that Janet Yellen is coming into office in 2 weeks, right after the next FOMC meeting. Of course, nothing will be done there, partly because she's about to come into office and they wouldn't make some big change, and also because the economy is falling apart. And again, I cannot wait till the next NFP report in early February, because now that Congress wouldn't extend the benefits for 1.3 million people, the unemployment benefits, we could go below 6%. From 6.7% on the unemployment rate next month. And I wouldn't be surprised if we're below 5% by the end of this year, even though we'll have all-time high real unemployment. So again, a lot went on this week. Keep your eyes on the physical gold and silver markets, which are finally appear to be breaking away from the cartel. Of course, they'll fight tooth and nail. And just watch the economic news around the world, because it's just going to be screaming money printing until finally you see some real major money printing announcements, particularly from the Fed and the ECB. Well, thanks a lot. I'm glad to have been doing this with what was going on with my computer. Have a great weekend.